If you're self-employed and you've looked into tax planning strategies, you have most likely heard about an S corporation, and you probably don't know 100% what it is or what it actually does. But a lot of people promote S corporations as kind of this end-all be-all of tax planning. And it's not that. It is a great strategy for a lot of people, but it's not a great fit for everybody. So what is an S corporation and how does it work? An S corporation essentially takes your self-employment tax and it reduces what you are paying into FICA. So when you're a sole proprietorship, you pay federal income tax and then you also pay self-employment tax on your income. So you are paying 15.3% in FICA taxes. And that is composed of Social Security and Medicare. Now, Social Security does get capped at a certain point, and then there is an additional Medicare tax. Social Security is the largest portion of this FICA tax. So once you hit a certain level, so to speak, that 15.3% drops drastically because you're only experiencing Medicare at that point in time. So you no longer have Social Security, you're just doing Medicare. So you just get a portion of those FICA taxes. S corporations take that income that you have coming in from a sole proprietorship, and they kind of split it up into two different sections. So you had to pay yourself reasonable compensation through payroll, which is subject to FICA taxes. So you're still paying into Social Security and Medicare. You're still experiencing a 15.3% on your reasonable compensation. The income that you earn beyond your reasonable compensation is not subject to FICA taxes. So that's where the 15.3% savings comes in. The issue is that S corporations require a far more complex tax return. So your price for tax prep is going to go up. And if you're trying to do it yourself, I would strongly discourage trying to file an S corporation on your own. Sole proprietorships are a little bit different. A lot of people do a decent job preparing those. I still recommend working with a professional, but I get it if that's not in the cards for you. S corporations, on the other hand, you really need a professional. You also end up experiencing issues with trying to pull money out, property out. You can get yourself into a lot of trouble with an S corporation. You have these increased costs for compliance. And sometimes the savings is not there because your reasonable compensation is too high in comparison to your actual income. And so you're actually sometimes not saving any money. So be careful. If you want to learn more about it, I'm releasing a video tomorrow about S corporations. So make sure you subscribe so that you get a notification on it. And I'll go into more depth how this works.